So, today we will discuss what is money and what are its function. Before that, we will learn what is barter system. So, barter system is any transaction that takes place in the absence of money. Okay, so any transaction that takes place in the absence of money is called barter system. So basically, barter system is where barter system takes place when what the other person wish to buy and the other person desire to sell. So this is called barter system. Okay. So what are the limitations of barter system? Lack of medium of exchange, lack of measure of value, lack of store of value, and means lack of standard of deferred payments. So all these terms, that is medium of exchange, measure of value, store of value, and means for standard of deferred payments. These are lack of these functions are the limitations of the barter system. Okay. So when the money was introduced, the limitations of the barter system has been eradicated. Okay, so we will discuss what is money. Money is any good that is widely used and accepted in transactions involving the transfer of goods and services from one person to another person. Money is anything which is generally accepted as a medium of exchange, measure of value, store of value, and means for standard of deferred payments. So, money is a commodity that is accepted by general consent as a medium of economic exchange. So, money is a commodity that is accepted by all the people in a nation as a medium of economic exchange. So, money is any good that is accepted in transaction involving the transfer of goods and services from one person to another person. Okay, so we will move on to next slide. So there are three functions of money. First function is primary function of money. Second function is secondary function of money. And the third is contingent function of money. So first we will learn about what are the primary functions of money. Okay class? So we will move on to the next slide. So you can, as you can see, functions of money, the two basic functions are, first you can see these are the primary functions and these are the secondary functions. As you can see, primary functions is divided into two parts, that is medium of exchange and measure of value, whereas secondary function is standard of deferred payments and transfer of value. So the primary function of money is first medium of exchange. It means that money can be used to make payments for all the transactions of goods and services. Okay, so this means that when any transaction is taking place, when a person is buying or selling goods, the money act as a medium of exchange. So a buyer can buy goods through money and a seller can sell goods for money. It is an essential function of money. Okay, so the second primary function of money is measure of value. Money serves as a measure of value. The value of all goods and services is expressed in terms of money. So basically, measure of value is when you are going to purchase any good, the money, the value of the goods is defined in terms of money. Like when you are going in mall and buying a shirt, so the value of shirt will be expressed in terms of money. Like you are purchasing a shirt of rupees 1500, so the value of shirt is defined in terms of money. Okay, so we will move on to next function, that is secondary function of money. So the first function secondary function of money is standard of deferred payments. So it means that money act as a standard for making future payments. It has made deferred payments much easier than before. So basically the function that is standard of deferred payments means that any transaction that is made in future, like when you are going to a shop and you purchase a good and you ask the shopkeeper that you will pay the money later on. So this is called standard of deferred payments, because later on you will pay the money to the shopkeeper, you will not return the good to the shopkeeper, right? So money act as a standard for making future payments. It has made deferred payments much easier than before. So here's an example I have written. When we borrow money from somebody, we have to return both the principal as well as the interest amount in the future. So money is a convenient mode of calculation of and payment of interest amount to be paid in the future. And this function of money, that is standard of deferred payment, has facilitated borrowing and lending. So the standard pay of deferred payments, this function has made the borrowing and lending easier. Okay, because borrowing and lending, these are the transactions that are made in future. Okay, it has also led to the creation of financial institution. So basically, the standard of deferred payments has helped in the creation of financial institution, because the maximum transactions that maximum payments are done in future only, not at that current moment. Okay, so we will move on to next secondary function of money. So the next secondary function of money is store of value. So a store of value implies a store of wealth. Money can be easily stored for future use. It is the most convenient and economical means to store earning and wealth. So basically, money is not something that will be not in use in later time period. Okay, you can store money, like you had to buy phone in a later period. Okay, you had to buy phone in future and you're storing money for purchasing that phone. So after some time, when you have stored money but you don't want to buy the phone, then you can spend that money on other things. This means that the store of value implies a store of wealth, so you can store money for a long period of time. Okay, so the third secondary function of money is transfer of value. So here, this means that money also serves for transfer of value. It facilitates buying and selling goods not only in the domestic country but also in the other parts of the world. Okay, so here basically means money can be transferred from one person to another in a very easier and convenient form. Example, in today's era, when the e-commerce websites are there, when you are purchasing goods, so the when you receive the good, then you only made the payment. Okay, you are receiving goods from one end of the world, and you are making payments to the person. So you can say that money can be transferred easily from one person to another person. Okay, so these are three are the secondary functions of the money. First is transfer of values, second is a store of value, and third is standard of deferred payments. Okay, now we will move on to last function. So the third function, that is contingent function of the money, is basis of credit. So credit means that taking loan or paying in future. Okay. Basically, you use money in today's time and you make payments in the future time period. Okay. So second is distribution of social income, means that the calculation of national income can be done through the presence of money. Okay. Third is liquidation of wealth. And fourth is basis of equalizing marginal utility and marginal productivity. Okay. So we will revise again what are the three basic functions of money. So the primary function of money is medium of exchange and measure of value. And secondary function of money is standard of deferred payments and store of value. and transfer of value. And the third function is contingent function of money, which is basis of credit, distribution of social income, liquidation of wealth, and basis of equalizing marginal utility and marginal productivity. Okay, so that's all for today. So thank you, class. Okay, goodbye.